Hey guys, welcome back to the channel. Today I'm going to be providing a market analysis with logarithmic regression curves. I hope you guys enjoy this video, and if you are new to the channel, please leave a like and subscribe. So I have two logarithmic regression curves, one in green and one in red. The red one is fitting data from the peak in 2011, the peak in 2013, and the peak in 2017, and it fits a curve which extends outward and helps us identify when the market is severely overextended. So we can see how price action was, just at the bottom of this regression curve towards the peak in April of 2021. We also have this green band, which is fitting data from the previous bear markets in 2012, 2015, and 2016, as well as 2018. So it's taking up all of these data points and fitting a curve to this and kind of projecting it outwards so that we can help identify where the next bear market bottom could ultimately be and where a good accumulation zone is for Bitcoin. So we also have the 200-week simple moving average in blue because every bear market where we had 200 weeks of data, it has provided as the bottom. So you can see how we double bottomed on the 200-week simple moving average in 2015 right here. We also had a bottom on this in 2019 where price action really just kind of ultimately bottomed out around the midline of this regression curve and the 200-week simple moving average. So if we fast forward to today, the midline of the regression curve is 21,000 and the 200-week simple moving average is 22,000. So they're very close in price action and what we can expect. And if I were to assume Bitcoin is going back down to this level, that would present a phenomenal opportunity, a long-term opportunity to accumulate Bitcoin, not only for short-term seeing some sort of relief rally, but also for the long-term from a cycle perspective. So I would assume that considering how the 200-week simple moving average has provided support in the bear market phases for the last two bear markets, we can only make the assumption that if we go back down towards that, that could be where the bear market bottom ultimately ends up being. We also have confluence with this 2017 cycle high. So this being huge, massive resistance for several years could flip as support in the event that we come back down, retest that as a key level and bottom there for the bear market. We would also be roughly around the midline of the regression curve, and you can see how we bottomed in 2018 on the midline of the regression curve. So currently the whole entire band ranges from 14,000 to 30,000, but the key component of this logarithmic regression curve is that it will continuously increase. So if we kind of project these values out a bit and just kind of extend them, you can see if we are to make some sort of bottom at the end of 2022, that could correspond to much higher valuations. So at the end of 2022, the midline of this regression curve will be around $28,000. The top will be around $40,000 and the bottom will be around $18,000. So I would expect anywhere between $18,000 and say $25,000 to be the bottom, considering that we've seen in the past where the bottom of the bear market comes roughly around the 200-week simple moving average and roughly around the midline of this regression curve. Now that's not to say we won't retest the bottom. I believe we will, but the thing about this indicator is it's consistently and continuously rising. So we could bottom before ultimately testing the bottom of this indicator. So if we go back to 2018, you can see how the bottom was in December of 2018 at $3,200, but we went to the bottom of the regression band in March of 2020 at $4,800. So really it's just about when we ultimately bottom, and I would expect, considering how we've already been declining in this bear market for 30 weeks, we are pretty close. I would say that most likely the bottom will occur towards the end of 2022, and that would roughly be corresponded to these indicators between $18,000 and $22,000, considering that's where the regression bands are and the 200-week simple moving average. So that is the end of the video, guys. I hope you did enjoy, and as always, I will see you in the next one.